Hi everyone, how you doing? First of all, thank you very much for coming and making it this event. My name is Lou. I'm with the Solana Foundation, so I look after Asia for the foundation. Most of the stuff I do is really business development, partnerships, and regulatory stuff. I think, as everyone knows, things are becoming more and more institutionalized these days. So apologies for wearing the suit. With that said, I think we have a fantastic panel today. It is called the Solana, the fast lane on Solana, DePIN in the on-chain economy. I think to get started, we'd love to kind of have maybe Mike, you can kick off and make an introduction, and we'll just go from my right to your left. Yeah.
First, I'd like to ask a quick question. Out of the audience here, how familiar are we with Solana, I guess, in the first place? So then we can, yeah, okay. Because, this isn't necessarily like a Solana thing, right? So, okay, cool. I'm Mike. I recently joined Jupiter and had Japan stuff. Yeah. Okay. Oh, sorry. Jupiter is one of the largest kind of DeFi protocols on the Solana blockchain. It's kind of started off as a very simple swap mechanism, but now it's like doing way too much, way too quickly, which is a good thing. So yeah, that's Jupiter.
Hello, everyone. My name is Raya from Citadel. I'm from South Korea. So Citadel is all about a little different level of the lending protocol that helps project to raise money without diluting their tokens, using their tokens as a collateral to lend stablecoins. But long story short, we are the missing part of the DeFi network on Solana. So yeah, we are launching testnet next month. We are launching mainnet after next month. So exciting time.
Awesome. Hi, everybody. My name is Peter. I'm part of the Zeus Network team. So I've been in the space since 2020. I think some of you guys are familiar with Solana, and since then and now, Solana has evolved into a completely different ecosystem. So for Zeus Network, we started building Bitcoin applications on Solana, and we're specializing Bitcoin and Bitcoin yield on Solana. So we've been working alongside many DeFi protocols and alongside with Solana Foundation to push forward that on-chain economy. So in the discussion, I'm happy to share a little bit more of that. Thank you.
Yeah, fantastic. In these events, I always try to keep it very casual and try to candidly, I'm a little bit selfish. I've tried to ask questions that I'm curious about. So hopefully the audience will be okay with that. I think maybe just starting at a high level, given all the changes from the regulatory perspective and kind of the focus on, stablecoin, tokenized assets in kind of the mainstream media, I'd love to kind of hear from each of you individually, especially kind of the verticals that you're in. Like, what has been some of the biggest changes you've seen, whether it's tailwinds or headwinds in the last 6 months, and how has that kind of changed your team strategy, if at all? Yeah, please.
So I'll answer that very specifically to Japan. Japan is a very interesting crypto market. Let's see. So as a DEX, decentralized exchange aggregator, Jupiter's in a very awkward position, to be honest. We are not necessarily super illegal, but we are also not a licensed virtual currency exchange operator. So we are not super legal as well, in the sense that we can exist. Japanese users can use our products, but we cannot officially try to do user acquisition, right? And so my job here in Japan is a bit interesting. Out of Jupiter, there are kind of two co-founders, and then there's a very visual or vocal guy who's kind of like the COO. His name is Cash. And there's Cash and Meow. And Meow is one of the co-founders, and he's kind of like the sort of like the Steve Jobs visionary, right? And he has this thesis called Web 4, right? What comes after Web 3? And very simply put, the idea is that, like, just a review of Web 3, right? Read, write, own. You can now own a piece of the internet, essentially. But especially with Solana, the technology and the users and all this momentum has created a bunch of meme coins, right? And we think, it's very easy to dismiss meme coins as, like, oh, that's so stupid, fart coin is so stupid or whatever. But it's actually like the primordial soup. It's the beginning for kind of what Meow sees as his vision for Web4, which is that, like, anyone can create money. It doesn't mean that everyone's money is going to be valuable, but we actually have the technology that anyone can do it now. And so, for example, you might have seen that Kanye West recently launched a coin, Yeezy Coin. And yes, it kind of, there was some unfortunate, like maybe rumors about insider stuff or whatever, and it did this, but it's doing this. And this is, roughly, I don't know what it is right now, but it was like $800 million worth of value, right? And so what that means is when you have an idea and a culture and kind of human human instincts and humanism, now you can actually apply value to it, right? And so that's kind of the idea of tokenization. Now, going back to your question on regulation, right? All of this is probably not going to be realized in Japan too soon. So it'll be interesting to see how Japan catches up to the true DeFi and decentralized economy. Stablecoins, SBI, a very big fintech company here, and then there's JPYC. So we've had two very large announcements for stablecoins in Japan, which will be very exciting. Again, just literally the first step for hopefully something interesting for the next few years.
Yeah, I'll say it in the Solana perspective, I guess. So because I've been in Solana ecosystem for like 4 years. Maybe it's not too long for a just career perspective, but 4 years like eternity in a blockchain world. So I've been there for a while, and then before this last 6 months, it was more about unicorn and rainbow. It's more about Vuzi Fugazi. It's like a lot of mid-curve discussion that goes around like metaverse and something that you don't see it in reality, but you just think that there's a like great future of it. I'm not saying metaverse is wrong or anything, but at the moment when the industry turns into a little more tradified, payfi, DeFi, little more applicable applications like RWA and stuff, I think that's when the crypto in general has to had a turning point into the real world matter assets. So I believe that the changes so far that we have seen for the last 6 months is incredible. I love it so much because now it really matters for the world. DAT and everything that is pops up in the mainstream media, like the Fox News is talking about the crypto, and the Trump is talking about like Bitcoin presence and whatnot. Might sound like a stupid here and there, but overall, I think this is a great changes in the whole, because now we are talking about real revenue making businesses. Now we are talking about real world impactful businesses from here. That's where the real world adoption is happening, and we are just glad that we are here around. And in our protocol, we also had a little bit of a pivot here and there related with a USD stablecoin asset adoption type of the aspect. But long story short, I love it. Can't complain. It feels like the vision that we had like 4 years ago are now, happening in real world. So I'm glad.
Yeah, thanks for sharing. I think I will touch on the Bitcoin progress specifically on Solana. In the past 6 months to a year, I think we have seen tremendous progress about the Bitcoin liquidity and integration happening on Solana. About a year ago, we envisioned there will be more tokenized Bitcoin on Solana. And I think in the past 6 months, we definitely see there are more companies issuing tokenized Bitcoin on Solana. When we first started, WBTC was one of the strongest pair and the only pair. And throughout the years, we see Coinbase BTC launching on Solana. We have our own ZBTC, and now there's XBTC, and there's much more Bitcoins coming onto Solana. And to me, I think it is an interesting shift because many of the people have first maybe known about Solana because of the main coin. But I think Solana is definitely beyond that. The infrastructure, the technology is definitely ready to onboard the next generation of users. And besides that, we're seeing more stablecoin issuers happening on Solana. There's real use cases, PayFi, for example, I just mentioned, and now there's even X stocks trading on Solana. So there's definitely a lot of different assets that's being traded on Solana, and with the upgraded infrastructure, it is proven that Solana downtime has been zero so far. Being able to handle that kind of usage and activity is something that we're very, very, very excited for the ecosystem, because with the technical advantage of Solana versus Ethereum, there's definitely a lot of potential still. I think where we are right now, Solana is still growing. And in the future, hopefully, I think we'll be able to capture more of that TVL and activity from other ecosystem like Ethereum.
Thanks for that. And so, like, I'm happy to set the stage a little bit, and kind of step out of my role as a moderator. Our North Star as Solana Foundation, and hopefully within the whole ecosystem, is what we call internet capital markets. So, excuse me, the way that we see the world is that we believe that there needs to be one ecosystem where both money, assets, and other use cases all thrive in one place. When you start to fracture different use cases, whether you call yourself a specific payments chain, or you call yourself a specific assets chain or a gaming chain, what happens is you're really fragmenting liquidity. And the beauty of kind of blockchain technology is the ability for assets and for money to move, right? So here's there's always two legs within a trade. There's a money leg and then the assets leg. It's called DVP. And on Solana today, in the last year, in terms of stablecoin transactions, we've processed about $10 trillion. $10 trillion. There's no other chain that can really compete on that side, maybe outside of Tron. Number two, in terms of the assets, we are already working with pretty much every single asset manager that's over $1 trillion. So the amount of assets that's actually plugged in terms of enabled within Solana ecosystem is already there. So we have the money, we have the assets, but what we need right now is to support teams like these to kind of match the other side, which is to help pull those assets into the DeFi ecosystem. And so that's kind of how we see the world today, and kind of how everything kind of works together. So it can be the trading platform, the execution platform, the launchpad. It can be borrow, lend, credits, X stocks, and BTC as well. We see a world where the assets are actually a spectrum. So on the left-hand side, kind of as Mike mentioned, those are kind of the fun and play meme coins. And then on the right-hand side, you have literally money market funds coming from BlackRock. But our vision is that all of those assets should be in one ecosystem, and everything that can be financialized will be, but doesn't mean that they will all stay relevant for the long term, right? Okay. So that's kind of how we see it. So I'm very, very excited to be able to share similar visions as well. So maybe the next question I'll have is, so in terms of the next steps, so kind of where you guys are today, whether in Japan or in Korea or just kind of globally with kind of the BTC narrative, what are some upcoming features? What are some upcoming things that you guys are prioritizing?
I'll answer that question two ways. One is just specific to Jupiter, and then one is kind of maybe my role specific to Japan. With Jupiter, it first started aggregating liquidity on Solana. And now Jupiter is really kind of going up and down the stack, creating tools for market makers. Recently launched JuPlend, short-term money markets, mobile apps, token creation, and then Jupiter recently acquired Drip House, which is an NFT platform. So just like I was saying, all sorts of assets on Solana, right? And it's all about kind of pools of liquidity. And so I don't know if I should say this out loud, but like we should try to siphon as much, liquidity from traditional equity markets on chain, because it's so much more efficient, right? Why do we still buy T-bills and traditional financial instruments using these old rails? They should just all be on Solana. It'd be much faster, much more efficient. And there's this other vision in Jupiter called GUM, which is Giant Unified Markets. Imagine if you can trade some profits from a barrel of oil into some fart coin, into some 3x leveraged ETF, into like 1/4 of a gold bar, right? Yeah, you could do that right now with TradFi, but you're going to have to use so many different kind of markets and technologies and stuff, but that can all be done on Solana eventually. So that's kind of, I think, where Jupiter's going, which is kind of aggregate everything. So that'll be really exciting. Number two, specific to Japan, like I mentioned previously, regulation so far has kind of sort of made the on-chain economy in Japan a little bit smaller than we'd like it to. I'd like to remind everyone that Japan is the third largest economy in the world, third largest GDP. The Tokyo Stock Exchange is, I think, like fourth or fifth after the US and China. So there's so much potential here. And stablecoins will help accelerate the on-chain economy. And then RWAs are a fairly hot topic within the Japanese crypto community. But, you look around, you guys, there's so much concrete everywhere, right? It's a concrete jungle, beautiful buildings and architecture. Imagine if you could own, 1/5000th of the Roppongi Hills, right? And you can own a little bit of that and then trade it for something on Solana. So hopefully, for me, I'd like to kind of work with a lot of TradFi folks in Japan, fintech companies, and try to help accelerate their kind of progress getting on-chain. So that's my answer.
Yep. So in the past, our company has been working on, the very DeFi staking-based gaming and etc. So it was a little less about DeFi, a little more about the Web3 degens, directly contacting with those areas as that kind of area. Right now, we are, as a founder who has been here for more than 3 years, there are some problems that we see from the projects. So when projects needs money, unfortunately, they are going for OTC deals. I'm saying this is so unfortunate because there are so many discounts happening there. So like 50% discounts with a 3 months vesting, that is going to be direct dump on the retails in after 3 months, which is not really beautiful thing to see. So I think I'm not blaming the projects, but in the future, in the better future, I think those OTC deals needs to go like let's say 10%, 5% type of the discounted deal, just like TradFi. TradFi, there is obviously OTC deals, but discount ratio is much, much smaller. The reason why that is happening is because there is no other option. And we would love to become a part of the movement that actually improve that lending market for the projects that utilize their equity, aka tokens, to be liquidized into USD, and then let them use it. Because like a lot of idle treasuries are out there already, and then because of the DAT, it's actually growing, and unfortunately, there are not a lot of places, not a lot of ways that you can make it into something that you can utilize it right off. That's just missing space, and then also the bond market. It is essentially what we are trying to do is a corporate bond market on DeFi, and unfortunately, there is none. So that's why we think that we are building something right for the right timing and the right position. So as I said, 2 months left for the mainnet. So I'm excited about that too. A little bit about the Korean market. Korean market is also moving very fast in terms of the stable coins, but I'm pretty sure it's gonna still take another year or two because of a lot of conflicts between the politicians and regulatory businesses. But we are talking with the Kaya chain and everybody that is relevant with that movement, and then try to see where we can fit as a DeFi protocol. But yeah.
Awesome. We believe Bitcoin will be utilized better on Solana. So we took a look at the evolution of Bitcoin. It's been a buy and hold asset for the longest time. And in the recent years, we're starting to see more DeFi happening with Bitcoin. And for us, we've been building Bitcoin infrastructure on Solana. And I think our vision and our goal is to make sure that Bitcoin can be utilized better on Solana in a permissionless and a secure manner. So that's what we have been doing. And in the past 6 months, we have successfully bring over 320 Bitcoin through a permissionless manner. There's no KYC, KYB, just like how Bitcoin should be. Bitcoin should be free, self-custody, and it's a true ownership of digital asset. So when we're taking a look at Bitcoin, I think there's huge potential for Bitcoin to grow the Bitcoin economy on Solana just because of the capital efficiency. I think at this point, it's not about how much TVL you have. It's about how utilized, how efficient the asset is on chain. And this is what we're seeing on Solana. I think there's a lot of projects are looking to generate yield on the Bitcoin. But the yield that we're seeing on Solana is actually from the user. So it's sustainable yield and not just inflated token that's given out as emission. So these are the things that we've been observing. And I think where we are right now in terms of Bitcoin on Solana is still quite an early stage in comparison to other more established ecosystems. But again, I think there's more companies that are seeing the potential here and are onboarding their Bitcoin onto Solana. And we see other listed companies acquiring, more Bitcoins. And I think now they are acquiring more Bitcoins, but the next stage we think is that they're going to start thinking, how can they generate more with their Bitcoin holdings? So I think for our job right now is we're setting up the infrastructure to be prepared for that moment when it happens. All these people, holders, or companies holding Bitcoin in their balance sheet, if they're looking to generate yield on their Bitcoin, Solana is one of the most efficient blockchain in the space right now. And the yield is generated from real users, from transaction volumes, from real borrow lending protocols. And these are the things that we see there's huge potential.
Awesome. I think our time is up. So I want to say thank you to all the panelists, and really appreciated this conversation. I've learned a lot.
Thank you.
Thank you very much.
Thank you.